Have you ever noticed how the prices of your favorite foods at the grocery store can fluctuate, sometimes quite dramatically? It might seem random, but often there is a powerful force at play for a way in a farmer's field. What is this hidden influence that can make our everyday meals more expensive? Extreme heat significantly impacts crop prices primarily by reducing yields, damaging quality, and disrupting supply chains, which ultimately leads to higher costs for consumers. When essential crops like corn, wheat, or soybeans suffer from prolonged high temperatures, there simply is not as much to go around. The core reason behind this lies in plant biology and fundamental economic principles. Plants have optimal temperature ranges for healthy growth and successful reproduction. When temperatures soar far above this range, they experience what is known as heat stress. This stress can inhibit crucial processes like photosynthesis, reduce their ability to absorb water, and even sterilize pollen, preventing proper grain or fruit formation. For instance, during critical flowering or grain-filling stages, extreme heat can drastically cut potential yields, sometimes by as much as 10 to 30% or more. Less yield means a tighter supply in the market, and basic economics tells us that when supply dwindles while demand remains constant, prices tend to rise. Additionally, extreme heat often coincides with drought conditions, which exacerbates the problem by adding water scarcity to the mix, forcing farmers to harvest smaller, lower-quality crops or even abandon fields entirely. As a consumer or investor, understanding this connection means you can be more aware of the broader factors influencing food costs. It is not about predicting daily price changes, but rather recognizing that sustained global or regional heat waves during critical growing seasons can signal potential upward pressure on prices for certain agricultural commodities. You might observe these trends reflected in future contracts for grains or even in the price of food staples at your local market a few months later. Consider looking at agricultural reports from key growing regions for major staples like corn in the American Midwest or wheat in the European Union. Furthermore, the increasing frequency and intensity of extreme weather events due to climate change introduce a new level of volatility to these markets. Agricultural commodity markets are particularly sensitive to these shifts, making them important to monitor. By understanding the direct link between extreme heat and crop performance, you gain a clearer picture of potential food inflation and the underlying dynamics of the global food supply chain, helping you make more informed decisions about your grocery budget and investments.